You're listening to Tarakki Talks.
Hello and welcome everyone. You're joining me, Ahalya, on a brand new episode of Tarakki Talks, our very own podcast series brought to you by ICICI Prudential. Now, on today's podcast, we're going to be discussing a really important investment tool called the ICICI Prudential Multi-Asset Fund. But to help us really understand the use of this tool and how we can make the best of it is our guest today, Khyati Mashru Vasani, the Chief Financial Coach, CWM USA, who's been an entrepreneur for about 15 years now and is really dedicated to being, and I love this, being every person's personal CFO. So let me welcome her to the podcast. Hi, Khyati. Thank you for being with us today.
Hi, Ahalya. How are you?
Doing really well, and I'm glad we've got you here, Khyati, because through your career, you've obviously been very passionate about understanding every individual investor's financial requirements and sort of molding their financial journey to suit those needs, right? And every investment tool kind of fits in differently for different people. But to start things off, let's talk about the multi-asset fund and the basic structure of it, and then maybe go into how it can play a role in everyone's investment journeys. Start us off with that, please.
Sure. So let's first understand, according to SEBI definition, what exactly is multi-asset fund. So multi-asset fund is a fund which invests into 3 or more asset class within a single fund. And as the name suggests, multi-asset involves investing in multiple asset classes, equity, debt, commodities, and REITs. Like specifically when I talk about ICICI multi-asset fund, these are the 4 major asset classes that the fund is invested in right now. And at the same time, they have money as cash and cash equivalents also as per market situation. And what happens is each and every asset class, Ahalya, has a very different degree of risk associated. And that is the reason the return of each of these asset classes is different. So multi-asset fund basically allows investors to get a good risk-adjusted and inflation-beating returns over a period of time.
All right, perfect. That's a good launch point for us, and also sounds like quite an enticing investment tool. What would you say is the highlight of the multi-asset fund, Khyati?
So what makes this fund different from other hybrid category fund is that, even in hybrid, like you get equity and debt. But your investor also gets, like I said, that this fund invests into gold. This fund also invests into REITs. So investor through this fund gets an option to invest into all of this. That's very important thing. I have learned one thing from my gurus that I follow, that asset allocation eats stock picking for breakfast in a longer run. So what it means is that you can possibly go wrong with picking up some stocks or some fund, that is okay, but you cannot go wrong with asset allocation. Because more than the selection of your stocks or fund, it is your asset allocation which will decide or determine the return that your portfolio will generate. So, best thing about this fund is that you don't really need to keep tracking which asset you should be investing in which asset you need to get in, which asset you need to get out. As per your risk appetite, you can invest in this fund, and by default, the fund will rebalance itself according to the market situation.
Okay. That once again does sound quite appealing and very unique, right, when it comes to how it can play a role in each person's investment journey. So are there any other benefits or advantages that this fund offers that you'd like to elaborate on, Khyati?
So coming to the benefits and advantage, obviously the first benefit is investing across asset class. So you don't need to track it, review it, or rebalancing it because it is done at a fund level. So what happens is your underlying risk is well spread through this fund. Now, see, every asset has its own cycle. Like equity will perform for a few years, but that time you will see debt will be at stagnant or rather on the opposite side. Because both these asset classes have inverse relationship. When equity is higher, you'll see debt stagnant or lower, and vice versa. When you see debt going up, you'll see equity stagnant or lower. In a situation like this, we recently had a situation like last week about a war and all of that. We saw that this can possibly impact the gold prices. So when a situation like that comes, obviously gold comes into the play. So the advantages is that every asset has its own cycle. And this fund, because of its allocation, you get a benefit of debt when debt is doing good. You get a benefit of equity when equity is doing good. You get a benefit of gold returns when the situation is not great. And best is gold also is a hedge for the investment. And same with real estate, wherein you get steady long-term returns. So best thing is that, it's across all the asset classes. You don't need to do the risk management. It's rebalanced, realigned at the fund level. At the same time, market downturns, you don't really need to worry about that. You can just stay invested. Panic selling is avoided in funds like this because by default, it's multi-asset and your allocation towards debt and gold will increase in times like that. And in the longer run, it can actually help you achieve, you can tag fund to your different goals, like maybe retirement, child's higher education, or for that matter, income generation in a longer run. So all those goals can be achieved with this if you are a long-term investor and if you stay invested with this one.
Okay. I think some really valuable insights that you've just brought up, Khyati. Maybe things that, as especially short-term or early investors maybe haven't kept in mind. So that's been quite useful. We also did touch upon this, but to elaborate on it further now in the conversation, it's also important to understand how each investor, right, depending on where they are in their journey, can use this tool. So could you take us through, say, how an early investor versus a short-term investor and then a long-term investor can make the best use of this multi-asset fund?
Absolutely. So let's talk about an early investor first. Early investor, somebody who's new to the world of investing. Usually they're not really sure how much should they allocate towards equity, towards debt, towards gold, towards real estate. Plus another thing is individually, if I have to allocate money towards each of these asset classes, I would need a huge capital. Best thing with a fund is you don't need that huge capital. Even if you're parking like say 10,000 rupees, it will be spread in all 4 asset classes.
Right.
So, that small amount, without worrying about which asset class to go for, you can just opt in for this fund, and by default your asset allocation will be managed well and the risk of the portfolio will be well spread.
Got it.
So even somebody, early investor who does not have adequate knowledge in such situation, this is a one-stop solution for them.
Okay.
Coming on to short-term investors. So usually short-term investors prefer traditional investments. They don't want to take a risk with equities or gold because they don't know how the short-term fluctuations will work. But for them, this works as a low-cost product and a low-risk product. The reason is, again, their money is spread into all asset classes. So, in a shorter run, one asset might perform and the other might not. So they will still make the most of the return and probably better return than what a traditional FD could have given them. And again, when it comes to long-term investors, especially in these times, the indices are at an all-time high. You see mid-cap and small-cap valuations are at a very higher side. And people are not really sure that how is it going to pan out going ahead. So this fund emerges as a better option because investors get access to a diversified portfolio and they don't need to worry about allocation or, rebalancing it. Because by default, when equity valuations become expensive, allocation towards debt increases and vice versa.
All right, perfect. Important for every investor to sort of understand their immediate need or requirement, or even assess their long-term need and requirement, and then use the multi-asset fund to their advantage. Now, one of the things that we're emphasizing in this conversation, Khyati, are also the advantages, right, of having multiple asset classes. So are there any features of each class that we need to keep in mind when taking this tool into consideration?
Right. So as per SEBI categorization, multi-asset fund invests in at least 3 asset classes. But we're talking about, ICICI multi-asset fund. So this fund has 4 asset classes that it is invested into presently. So first is equity. So equity, of course, plays a role of a wealth creator, but it goes through consolidation and growth during the process of wealth creation. So obviously, every investor has this journey. So the fund also goes through that. So, the benefit of equity in the portfolio, it helps in wealth creation. And in that journey, the fund also consolidates. So you don't have to worry about that. That's an advantage. Debt, obviously, it provides a downside protection and also gives stability to the entire portfolio. Coming to gold, that works as a hedge against, the inflation and all the other global factors. So by default, the fund gives you that protection. and REITs. So as I said, real estate is something which is again a long-term growth, and it gives you steady, consistent returns. So through REITs, even you get a benefit of that.
Perfect. And, Khyati, I think it's also important to understand why this particular combination. I mean, we already have mutual funds and SIPs, and, as investors, we also have the opportunities to put our money into different asset classes. So why did a combination like this even have to come into existence in the first place?
I have been into the industry for more than a decade now. And a lot of investors, they still understand that, okay, mutual fund means only equities. People think, okay, mutual fund is different and SIP is different. Okay. So, there was a need for a product which takes care of everything in a way that risk is well managed and something that does not require regular monitoring. Now, usually what happens when markets go higher, we do get calls from our clients and they want to understand what is to be done in a market like this. Suddenly, if market goes lower, they want to know if they should pull out their investments.
Right.
So with this fund is solution to all those challenges which were faced by investors.
Okay.
So you just decide how much money you want to pump in. You just decide how long you want to wait. And you invest in rest everything in terms of asset allocation, in terms of risk management, rebalancing, everything is taken care by the fund.
Got it. Okay, so you kind of sit back and let it go in autopilot mode, to put it quite simply. And I'm glad that you also brought up the idea of the volatile market, Khyati. I think, over the past year and maybe for, the next 6 months or so, the foreseeable future, we are going to be in an unsteady market, right? I think when looking at investment tools, one of the biggest criteria or one that is valued the most is how is this one going to protect me when the market is uncertain? So could you give us some insight into how the multi-asset fund works in those scenarios?
Sure. So as I said, this fund invests into 5 asset classes.
Okay.
Equity, debt, REITs, gold, and cash equivalents, depending on the market situation. So equity is just one part of this one. But when equity is not doing great or it's rather choppy or volatile, obviously all the other 4 asset classes will, come to the rescue and give you the required returns. Right. Now, when we speak to the investors, our year-on-year goal is that, you should beat inflation and make money more than inflation. Okay. And the times when markets are bad, global scenario is not great, all we need to focus on is at least my wealth has to keep pace with inflation if it's not growing. So this fund, in times when situation is not great, this fund just does that. It might not give you that great returns because obviously equities are not doing great, other markets are not doing great. But because it has a debt component, it will give you steady returns. Because it has gold, it will give a hedge to your portfolio. And at the same time, the REITs will remain constant, but over a period of time, that will also grow and give you that exponential returns. So, that's how this whole thing works.
Right. I think one of the other things that has come through, Khyati, in our conversation so far is that point that you brought up, especially about how you can afford to, no one likes it, but you can afford to maybe see some kind of downtime with the money that you've invested, but you can't really afford to mess up your asset allocation as such, right? So when it comes to the multi-asset fund, does it contribute only to wealth generation, or are there other reasons why it's important to actually put your energy into a fund like this?
No, wealth generation is something that happens by default in a fund like this. But more importantly, as I said, when you talk about compounding your wealth, eventually all the financial goals are going to be achieved with wealth. Right. So what leads to compounding wealth is not returns, but it is consistent returns.
Okay.
And this fund just does that. So it might not give you great returns, what a large cap, mid cap, or a small cap fund would do in like 1 year. But this is something which will give you consistent returns over a period of years. And that will lead to compounding your wealth, and that will lead to obviously wealth maximization and help you achieve all the different financial goals.
Absolutely. Consistency is key, as in many areas of life and investing as well. and I think finally, maybe another question that, might pop up in people's minds when they think about a fund like this, given that, it includes so many different assets, Khyati, is will there be a systematic withdrawal plan in the fund, like an SWP? Is that something that they can make use of? And also, will it be possible to withdraw from only one particular asset class, or, do you have to withdraw from the fund as a whole?
So no, you have to withdraw from fund as a whole. That's number one. Coming to another part of your question, is it possible? Yes, it's very much possible. Because this fund has diversification into all the asset classes. It does provide steady return, and that in turn fuels the regular withdrawals also. Only important thing to check is the taxation before you go for SWP.
Okay, sounds pretty simple. It's like they say, sometimes less is more, and one fund that kind of takes care of many of your asset classes can be a really useful tool to kickstart your investment journey, but also maybe to accelerate it depending on where you're at. Thank you so much, Khyati, for joining us on this edition of Tarakki Talks. It's been great picking your brain all about the MAF, and some really useful, I think, tips have come through as well.
Thank you. Thank you so much. It was pleasure having this discussion.
All right, we'll catch you on another episode of Tarakki Talks, brought to you by ICICI Prudential very soon, everybody. But in the meantime, happy investing. Stay safe and stay aware in the market situations. I'm Ahalya signing off. Catch you soon.
You were listening to Tarakki Talks.